G'day. G'day. It's Fish the Beach Bum Investor here with your cryptocurrency discussion and report for the 4th of October 2017 here in Australia. I'm joined today again by Rocky Palumbo, one of our, I guess we'll call him a regular guest on the show now. And we're going to discuss today mainly about Bitcoin Cash. It's had a big run up recently, back over those $600 marks. And Rocky wanted to talk to you about a bit of the, well, not a bit, have a thorough discussion about Bitcoin Cash and why he sees it as overvalued in the economy. And we may move on to a little bit about B2X. I've been doing some research on that, so we might move into that towards the end of the show, but that will be quite brief. And we'll do a full show on B2X, going over the full technology and its value addition to the economy. So, Rocky, thanks for joining us again, mate. Good to see you.
Yeah, thanks for having me back.
Yeah, mate, always a pleasure, always a pleasure. So I'm just going to jump over here and post up on Discord and let the guys know we're having the discussion. And hey, Bob Jack, Kong Savage Ruthless is in. I'm going to try and keep an eye on the chat today as well, Rocky, and that way I can fling questions at you when our group have some questions, just to keep things complicated like I like to do. Okay, so YouTube live now. All right, so that'll bring the guys over from the Crypto Wave investment crew. And Rocky, just before we go on to Bitcoin Cash, mate, great run up on Bitcoin since last time we spoke. We've been well over the 7,000 mark for US dollars. I saw it hitting as high as 7,400 during the night, Australian time. So, mate, good time since we last spoke for Bitcoin itself.
Yeah, it's a nice little run up. I'm expecting a pullback here this weekend, and then it could go higher up until closer to the fork coming, the B2X fork. Then it could pull back quite a bit for that, just from all the confusion of that. And then once we get that behind us, then I'm looking for much bigger numbers. Yeah,
for sure. I mean, the good thing was that the funny thing was one of the guys in our group actually called this resistance point nearly spot on and this is from points back at 5,000. He said it will stay bullish until 72 to 7,400. He picked it almost on the nose. So a lot of people were expecting some retracements around this mark, Rocky. And I think when that happens, when it's a public consensus that there's going to be a little bit of retracement at that point, it's nothing to worry about when it does start to take a little bit of profit back. If you've bought at those 7,400 highs, if you've FOMO'd, if you're a newbie and you've gone, oh, no, and you've jumped in, the best advice we always give to people is to hold. So, I mean, historically, no matter what high you've bought at, it's always got past that. So realistically, that's my best advice for people who did buy on those 7,400 highs during the night Australian time. Rocky, I'm assuming you're thinking the same thing?
Pretty close. I'm saying if you bought at 74 and it pulls back to 7,000 or something, just buy more, leverage yourself. Yeah.
Well, that's a good point. I mean, I do recommend for the newbies who watch our show that you don't jam everything in first go. So you leave yourself a bit of reserves, and then you're almost hoping for a little bit more retracement so you can pick up that Bitcoin cheaper. So, yeah, I think that's great advice, Rocky, for people who did get it at 7,400. If you haven't stacked in, you never put in more than you can afford to lose. Nothing you might have to spend immediately, because we don't know which way the market's going to go, very short term. We're sort of making more medium and long term predictions. So that's the best advice I can give. And if you do have a little bit more in your budget, you're stacked in at 7,400, look for those retracements. And what you do by buying in then is you actually take down your average buy price, which is obviously a good move in investing. So yeah, good tip from Rocky. Hey, Rocky, I'm going to let you mainly run the actual show today. What I'm going to do is I'm going to keep on the chat with the guys, because we do have a lot of newbies. And if I see any big questions coming up, I might just interrupt you and get you to clarify on it, if that's okay with you.
That's perfect.
Okay, great, mate. Take it away when you're ready. I'll get back to the chat and I'll interrupt as rarely as I can. Thanks again, Rocky.
Okay, let me just share my screen here. So this here is Roger Ver. Does he look familiar?
Let me have a look. Jump back over. Where is he? Oh, yeah, I've seen him before.
Okay, yeah, he was he got into Bitcoin pretty early. I think it was 2010 or 11. and he invested a lot in it and did, really well, of course. And he was one of the first VCs to help fund some startups. And he was basically a really good advocate for Bitcoin in the beginning. He's kind of gone rogue since. He kind of adopted the name in the early days, Bitcoin Jesus. Have you heard of that?
No, I hadn't heard that one. That seems a little bit, I don't know, that seems a little bit arrogant, really, doesn't it?
I don't think he named himself that. I think people just started calling him that. And then, recently, he's more like Bitcoin Lucifer these days, the fallen angel of Bitcoin. But let's take a listen to what he's got to say here. I'm going to have to turn my microphone off so you can hear this. So just give me a second. And then I'll play the clip. And it's only a few seconds, and I'll stop it and come back with the mic.
Bring us up to date. So there's been lots and lots of internal politics and fighting within Bitcoin, but if you read the Bitcoin white paper itself, it clearly defines Bitcoin as a chain of digital signatures. The Segwit version of Bitcoin gets rid of those digital signatures. So by the very definition given in the Satoshi Nakamoto white paper, a Segwit Bitcoin transaction is not a Bitcoin transaction. So from my point of view, Bitcoin Cash is the real Bitcoin.
And I'm looking forward to your response to that, Rocky.
Okay. Well, Roger Ver in the early days was a really good cheerleader. As far as the technical goes, yeah, he's a moron, right? Okay, so Segwit does not get rid of the digital signature, number one. The signature data is still in the block. It just has been rearranged. It was moved to a different area of the transaction and a different area of the block so that it's not counted towards the total block size. This is why Segwit, this is how Segwit gets more transactions in a block and how it's backwards compatible with the older nodes, because the older nodes can still see that the signature's there, but it doesn't count it towards the block size. So this is the genius of Core. They took the impossible, getting a bigger block size. Before Segwit, you had in order to get a bigger block size, you had to have a hard fork. But they did the impossible. They did it with a soft fork. And so, a soft fork is a much kinder, gentler fork. Not everybody has to upgrade all at once. All the wallets right now that don't have Segwit support, guess what? They still work because it's a soft fork. If Segwit was a hard fork, all these wallets that didn't upgrade yet just could not do a transaction at all. They just would be broken. They wouldn't work at all until they upgraded. So with the size of the community now, Bitcoin is so big to orchestrate a hard fork to get all of the wallets, all of the exchanges, all of the miners, all of the users, all to switch over all at once would be a monumental task. So I don't know how many hard forks we're going to have here on out. Maybe one or two more soon. I mean, when I say soon, I'm talking about the next 1 to 3 years. After that, the network's going to just be so big, it's going to be really hard to do a hard fork. But that's okay because there's other ways around it, just like we proved with Segwit. And so he goes on to say in that clip that because it took the signature data out, which it doesn't, he's 100% wrong, that it's not really Bitcoin anymore because in the white paper it talks about having the signature data in there, but then he goes on to say that Bitcoin Cash is the real Bitcoin because of this. But by that same logic, Bitcoin Cash did this emergency difficulty adjustment thing. That's not in the Satoshi white paper. So by his logic, Bitcoin Cash wouldn't be a Bitcoin transaction either. So he basically he's really lost it. He doesn't know what he's talking about and doesn't make any sense. Did you follow that?
Yeah, for sure. So basically what his argument is that anything that's actually, any transaction that takes place on the Bitcoin network as it stands now is not what he considers to be a Bitcoin transaction simply because of a Segwit overlay. Am I correct in saying that, Rocky?
Well, he said specifically that because SegWit takes the signature data out of the block, that it's no longer a transaction, a Bitcoin transaction. But it doesn't. The data is in the block. He's wrong.
Yeah.
And he's wrong anyway, because, I mean, there's been lots of changes since the white paper. Bitcoin is a growing and changing and evolving system. There's been lots of things added, lots of things taken out. To say that something doesn't precisely follow the white paper and therefore it's not Bitcoin, I mean, that's just a nonsensical statement. It doesn't make any sense.
Look, to me, Rocky, if Satoshi wanted it kept the way, if he wanted it kept the way he wanted it, and you know, my personal opinion is he would actually enjoy seeing it being developed in an open source environment. I mean, wasn't that the whole idea of Bitcoin to start with? It was open source, it was collaborative, it was, you know, I don't think he'd be disappointed with the improvements being made on the original concept of Bitcoin itself. So yeah, I get what you're saying. I don't think that improving Bitcoin is necessarily taking it away from its original proposition and the original vision that Satoshi had.
Oh yeah, I mean, you know, with all the updates and everything that Bitcoin has to go through, and all the changes it needs to evolve to meet demand. You know, we want Bitcoin. You know, what does it want to be? It wants to be a worldwide currency that, you know, it's mass adoption worldwide. And in order to do that, it's going to have to change.
Of course. I've said that from the start, Rocky. I've said if you guys think where we're at in terms of scalability, and you think this will be not even close, we need to be hitting, what, 100,000 transactions a second, something like that, Rocky?
You are spot on there. I mean, I think that's just the beginning, though. That's just the beginning for worldwide adoption, is 100,000 transactions per second. In fact, I got a presentation that talks precisely about that. And this presentation talks about how increasing the block size to scale Bitcoin just simply does not work. And this is why. It's well, first, to get that that goal, I took a look at Visa, how many transactions per second that whole system can handle. It could handle 56,000 transactions per second. It doesn't do that. Their system is capable of doing that. It very rarely ever gets anywhere near that high. But here's what MasterCard can do, and there's the total. I'm going to go through this kind of quick. And then, of course, then there's just bank transactions, you know, deposits and withdrawals from banks and checks, and, you know, your check card transactions. But according to the World Bank Organization, there's 62% of adults around the world are banked. So, you know, that leaves 38% unbanked. And Bitcoin wants everybody, right? Bitcoin wants to get everybody involved in it and take a big bite out of all of these things. And in the banking industry, the numbers are really hard to find. They kind of keep their numbers secret. But from what I read, I mean, it's somewhere between 200,000 and 500,000 transactions per second in the banking around the world. I mean, so just to start off as a worldwide currency that's even, you know, hopes to get some kind of mass adoption, you're going to have a goal of about 100,000 transactions per second. So what does that take? What would that take by just, you know, increasing the block size? So let's take a look at that. Before SegWit, the block size was 1 meg. Now SegWit is a block size increase, right? And there's still people that don't understand this today. It's kind of amazing. But SegWit is a block size increase, and by the end of the year, it's going to have blocks between about 3 megs and 3.8 megs, almost 4 megs, with Schnorr signatures. And when all the wallets have these SegWit compatibility with the addresses, I believe Electrum just came out yesterday with their 3.0 update, which allows for SegWit transactions. So if you have if you have a Electrum wallet, please update to the latest software, and you will be able to do SegWit transactions.
Great. So SegWit transactions, just to clarify for people who are used to using Bitcoin, are going to be cheaper. That's correct, isn't it?
Well, they count less, or they weigh less towards the block size. So, and a part of how the transaction is priced, it's a certain amount of Satoshis per byte. So if less of those bytes are counted, then your transaction is going to be cheaper. per per byte, because less of the bytes are counted. So
I really
that's
think that's an important step. I think that's a huge step, because what I like to see in the future is cryptocurrency. I think in places where I've lived, like I lived in Sri Lanka for a couple of years, and it's heavy cash economy. People don't carry around credit cards and things like that. Most of them don't have a bank account, but with all of them have a phone, all of them, and that means they've essentially got a digital wallet ready to go. And if those transaction fees on smaller transactions, like a 200 rupee transaction, like that's $2. If you can get the transaction fees down on that, it really makes it spendable by those people who have never really been able to manage finance in any other way except holding cash. So I think it opens a real opportunity for them. And if it can get adopted on that level in countries like Sri Lanka, India, heavy cash economies, the transactions per second could be quite up there, even higher than 100,000. But I think that whatever the issue is, it's the same as internet for me. I just lead people back to the internet all the time and say, do you think the internet now is as fast as we're ever going to get it? No, of course not. Well, definitely not in Australia. But it's the same with the scalability of crypto for me, and Bitcoin in particular, is that we're not at the fastest speeds we're ever going to see. We're not at the highest transactions that we can handle. And that's going to be something that maybe we don't even know the answer to yet, but we know it's coming because we've got, some of the top people in the world. There's the number of people moving into the crypto space and the top minds of the world moving into the crypto space. I believe whatever problem comes up, we collectively will solve it. Not me, I know nothing about it, but the guys who do. So yeah, I think transaction speeds are important to look at long term, but like you said, I mean, Segwit, if you're doing 2 megabit block sizes, what is the advantage of that, Rocky?
Oh, we're going to take a look at that. But to your comment about Sri Lanka and the people there that are unbanked, but they all have cell phones, and you said, well, this gives them the opportunity to have a digital wallet in their pocket there. It's much more than that. It's not only they have a digital wallet, but they're dealing in a currency that's responsible. It's not just being printed more tomorrow than today, and more the day after that than the day before, constantly being devalued by some government that's trying to control it.
No, that's a great point, Rocky. When I started going back to Sri Lanka in 2012, man, just after the Civil War, and the Sri Lankan rupee was at 75 rupees to the Australian dollar. Now it's at 125. So the Sri Lankan rupee has taken a major devaluation over the last sort of 6 years. And the reality is the government changed over there, and the government came in and went, what's going on here? We don't even know how much we owe. And the government came out and said, we don't know how much money we owe. Have no idea. So they could only guesstimate how much money the country actually owed. And man, I just think that when you get things like that, like money clearly being mismanaged by governments, that Bitcoin and cryptos in general just provide such a better alternative.
Oh yeah, and it's much safer to carry around. Because if you have it in your phone and you get pickpocketed, right? If somebody pickpockets your wallet and there's cash in it, that cash is gone. Now, if they pickpocket your phone and your Bitcoin's on it, you have it protected by a 6-digit PIN number, and nobody can spend it. You just get another phone, you download the wallet, put in your wallet words, and get all your Bitcoin back. So it's much easier to use, safer to carry, and it stores your value better than any currency, any fiat around the world.
Yeah, for sure. I'm just going to read a couple of the comments from our group here, Rocky. Crypto Chronicus is in the house. He made a joke about the soft fork being something like a cheesecake. I'm not even going to go into that. Mike T said, I've heard B2X is going to be faster and cheaper than BTC is currently. Cheaper fees, that is. Can you comment on that, Rocky? Oh, actually, we're mainly concentrating on Bitcoin Cash today. Sorry, Mike T. We will do another episode on B2X. Rocky, if you do know the answer to that off the top of your head, you're welcome to answer. Otherwise, 21 Million Club says, what's up, Rocky? What's up, Fish? How are you, man? Yeah, Miss.
How's it going, Dan?
MS ETH is in, says, evening. I wish the 21 Million Club was able to be in English.
I think he does both, English and Spanish.
Yeah, that's what I thought as well. I remember him telling me he was the first Mexican, I believe, reporting in reporting in an English language on Bitcoin. So I thought that was pretty cool.
Yeah, I'm not sure exactly. I mean, nobody knows exactly how fast the B2X network is going to be. It doesn't really matter. I mean, if you look at Cash, being nice, calling it that. If you look at Cash, it's much faster, right? They're having blocks. In fact, they're having blocks, they're having 50, 60 blocks an hour. So boy, that's all nice and fast. But I mean, is that good for the network? We're going to go into that in a few minutes here.
Cool. And Crypto Chronicus just had a question for you as well, Rocky, one that I can't answer. I'm not sure if you can, because much like me, you've probably never used it. But he just asked what the transaction fees are like on Bitcoin Cash. Have you ever used it and found out what the transaction fees are like on it?
The only time I used it was to transfer it to an exchange to dump it. But I'm sure they're quite fee. I'm sure those fees are quite low because there's nobody uses that network. I mean, you could go and take a look right now if you'd like. Let's see here. I think I have it up here. No, I don't. No, I don't have that tab. I could get to it if you want to hold on a minute.
Take your time, Rocky. You're good.
Okay, so here you could see, this is the block size. They have an 8 meg block, right? But their block sizes are actually 14K. I mean, what do you need 8 megs for when it's 14K, 15, 25K, 30K? These things are tiny. So, I mean, you could get very cheap transactions through there because you're not competing for the space, right? You're not trying to get in a full block, right? You're not trying to sneak into somebody before somebody else that has a higher fee. So you got to get a higher fee above them to try to get into the next block. That's the problem with Bitcoin when the mempool starts to back up. Are you familiar with the mempool?
No, I'm not, mate. Can you explain that a bit further, please?
Sure. When you first do a transaction, it goes to a place, kind of a waiting area to get into a block, and this is called the mempool. That's short for memory pool. And so it stacks these transactions in there. You could think of them stacking in there with the most expensive fees at top and the cheapest fees on the bottom. And so when the next block is mined and the miner starts to build the next block, or when the last block is mined and they start to build the next block, they start pulling the transactions off the top because, of course, the miners are greedy and they want to get the most fees as possible because they're getting that block reward, right? Plus all the transaction fees when they mine a block. So they're going to pull off these transactions from the top and to fill the next block. So of course they're going to pull off the most expensive transactions and leave the cheaper ones there for the next mining pool that finds a block. So with the mempool backed up, that causes the long wait times for confirmations and the high fees, everything that Roger Ver complains about. But the fix for that is Segwit, not bigger blocks. And I can explain why here. If we just go on with the presentation. So with the 1 megabyte block before Segwit, the network could handle about 3 transactions per second. And if these blocks are mostly full, you're adding like a 1 meg block to the blockchain every 10 minutes because the block is every 10 minutes on average. So if you just have a 1 meg block being added to the blockchain every 10 minutes, this is going to fill up a 1 terabyte hard drive in 19 years. But that's reasonable, right?
Yeah.
So now if you double, now if you double the block size, let me see if I double it here. We got a 2 meg block. Now you're going to 6 transactions per second, and you're filling up a 1 terabyte hard drive. You're going to have to add another 1 terabyte hard drive in 9.5 years. So as you keep doubling the block size, these numbers keep changing here. I'm not going to go through each one individually. When you get to 8 meg, it starts to take a little bit longer to download that block with 50/50 internet access. That's 50 megabits down, 50 megabits up. which is a somewhat fast internet connection these days. And you're taking a chance of it start to increase what's called an orphan rate. Now, orphan rate is very bad for the miners. It means you did the work and you found a block, but it gets rejected by the network because somebody else on the other side of the world already found that block. And so it starts to be an issue of transferring, propagating these blocks around to all the, thousands of nodes around the world. That takes some amount of time. And as the blocks get bigger and bigger and bigger, it takes more and more time, and this orphan rate goes up. And it is much better for a miner who is where the mining is more concentrated. So having a higher orphan rate actually promotes miner centralization, which is bad for Bitcoin. So anyway, with an 8 meg block size, you now have 24 transactions per second, and it's taking 2.37 years to fill up a 1 terabyte hard drive and having to add another one. But we're nowhere near this 100,000 transactions per second goal, right? This is our goal. And, so what is an 8 meg block like what Bcash has? I mean, it's not serving anything down the road, when we start to have a worldwide mass adoption.
Do you think that Rocky, sorry to interrupt, mate, I just wanted to ask you, do you think, because this is fairly new information to me, I never really, like, I got Bitcoin Cash for free, I never wanted to acquire more, so I never looked into it really. So I'm just wondering, is this possibly part of the cause of the run-up on Bitcoin Cash, is people who have come in new to the economy? Obviously there's new money coming in, we're hitting all-time highs in terms of the overall market cap. And I'm just wondering whether that people who are coming in, seeing Bitcoin Cash and trying it out, using it, finding out that it's got, faster and cheaper transactions, are saying, well, this is obviously the answer, when they're not actually looking long enough term, because obviously continuing to just double block sizes is not a long-term solution to get us to 100,000 transactions. So yes, at the moment, it works faster and cheaper, but for how long is the question. And
yes,
and that's the thing, is that, do you think that maybe is a reason for the Bitcoin Cash run up? Because everyone's gone, well, it's cheaper, it's faster, but what they don't realize is that's only going to be in the short to medium term, like probably only in the very short term, really, as mass adoption or
yes,
wider acceptance comes in.
Yes, these people are not doing their homework. They're not doing their due diligence. They're not looking into the coin like I have to find out, what the coin's about and how it works and why it's different and what they did and how it's going to affect the network long term. There's two things that are going to affect the network long term that they did. They did this 8 meg block, which scales it today, but will it scale it when Bitcoin goes worldwide adoption? There's no way in hell, right? Because it's only at 24 transactions per second, and we're looking for 100,000 transactions per second just to get started worldwide, just to even think about going worldwide mass adoption. I mean, if you really get worldwide mass adoption, this number is going to have to be 500,000 to 1 million transactions per second. But even here with 16 megs, if you double it again, you're only at 48 transactions per second, and you have to add another 1 terabyte hard drive every 1.19 years.
Yeah, it's not sustainable. Not using that method to get to 100,000 transactions per second, not sustainable at all. So it's a good point you make. I just wanted to read one of the questions we had here, because we do have a lot of newbies in our group, man. And this is going to seem like an obvious one to you, Rocky, but just for anyone who is watching who's a newbie, one of the regulars asked us, do you get free B2X for your Bitcoin Cash as well? And Crypto Chronicus answered and said, no, only for your BTC. And I just wanted to make that point, because we do have a lot of people who have only been in this space a month and they're learning. So yes, it will only be for your Bitcoin that you're going to get B2X. Not you won't get anything for holding the Bitcoin Cash. And I don't know, maybe that's some confusion that people are having as well, Rocky, because you've just seen one of our newbies ask the question, hey, do I get some B2X for my Bitcoin Cash as well? So perhaps other people have just assumed that they're going to get it, and that's why they've put it into Bitcoin Cash, because it has been an almighty run up.
Well, you've been into trading stocks and things before Bitcoin, before cryptocurrencies. Is that correct? I kind of got that feeling. I haven't watched your show a whole lot, your channel, but from what I have watched, I kind of get the feeling that you've been into it before crypto.
Yeah, stocks, commodities, and fiats, mate. I used to trade a little bit, yeah, let's say.
Okay, so are you familiar with the Wall Street term, what they call people who invest in the companies or commodities or whatever they're investing in that didn't do their homework? Do
I'm
you know
not
what
sure
they
what
call
the
that?
name is, but I certainly know the statistics, mate. The statistics are quite frightening. 90% of leverage traders, day traders, lose 90% of their capital within 90 days. So, yeah, I'm not sure what they call them. What is it, Rocky?
They call that dumb money.
Oh man, yeah, I've heard that term plenty of times. And I've got to say, Rocky, as I've said this a few times, this is still not smart money in this economy. Not yet. Not yet. There will be big smart money coming in, but this is still very much an emotionally driven economy. You can see it by the amount of the swings that are taken.
Okay, so when you're looking at some coin and trying to figure out why it's going up in value so much when it has such bad attributes about it, that's your answer, dumb money. It's people, there's some rumor came out, somebody started something in some country. A lot of the pump for Bcash right now is coming out of South Korea. So I don't know what's going on over there, if somebody's over there really pumping this over there, but the people throwing money at it did not do their homework. They did not do their due diligence. They did not look into the network's attributes like I have.
Yeah.
So let's go back.
I just wanted to make a quick point that Rocky brought up there. He's obviously keeping an eye on trade volumes, and for the newbies, that's so important to see where the money's coming from. It gives you an indication of what's going on. Well, it can help you get a clearer picture of what's going on. So, Rocky, you've looked at the trade volumes. It's primarily out of South Korea at the moment for Bitcoin Cash. Is that correct?
Yes, that's correct.
Okay, the Korean one. That's interesting, man. I wouldn't have thought they'd go with that. So, don't know what's going on there. But, yeah, like you said.
They've gone for lots of different ICOs and things over there. They pumped from that area of the world. And why? Who knows? You know, the word gets out that this is going to be the next great thing that's going to go 100,000x or 100x or 1,000x, and within the next week, and they just start throwing money at it. It's more of a gambling thing, I think, than an investment.
Yeah, and like I said, emotion, man. FOMO and panic selling drives this market. I hate to think about newbies getting in who haven't traded before and don't know how to hold on when they've bought too high, or how to not just move from one thing to another, panicking. Man, they're going to lose some money in this space because the volatility is pretty high. So I think it's really important to educate yourself before pulling the trigger. Okay, if you've got like 10 grand to invest and you want to muck around with $100 to start with, fine. But realistically, I think research and education, making sure you're aware of what's going on, that's going to win the game long term, not just getting on the same thing that everyone else is getting on. So yeah.
Oh, for sure. Yes, for sure. But I kind of fast forwarded through here a few lines, and you can see we're down to a 1 gigabyte block, and we're still only at 3,000 transactions per second. And anybody running a node that's keeping the full blockchain, these days you don't have to keep the full blockchain, but a certain percentage of all nodes do. So if you are keeping the full blockchain, you're going to have to add a 1 terabyte hard drive every 6.8 days.
Wow.
Okay.
Wow.
So
and that's 3% of the transaction speeds we need.
So yes. So we're going to have to double it again to 2 gigs, and now we're still only at 6,000 transactions per second, and you're adding a 1 terabyte hard drive every more than 3.5 days, right?
Yeah.
So let's go down to 8 gigs, and we're a quarter of the way, right? We're getting close now. We're 25,000 almost 25,000 transactions per second, but you're adding another terabyte hard drive every 20 hours, right?
What do they cost? They're about $500 each, aren't they? A terabyte hard drive.
How much?
I don't know. I don't know computers. I was saying about $500 each, aren't they? A terabyte hard drive or something like that.
In USD, no, that's much cheaper than that. They're about $80 or $90. You can get like a 3 terabyte hard drive, for a little less than 3 times as much. I just use this because they're very common.
Yeah, cool. I might have been thinking 10 terabyte for that price, and that'd be Australian dollars, so that'd be about 350 US.
So with a 16 gigabyte block size, and it's something to note here, even with a 4 gigabyte block size, let's back it up a little bit. It takes more than 10.5 minutes to just download 4.5 gigs. So you have to download it. You have to the nodes verify all the transactions in it, make sure they're correct, and then it uploads it to 3 or 4 other nodes. So this is like an hour processing time for a block that's coming in every 10 minutes. Do you
Wow.
see a problem with that?
Yeah, of course I do, man. Of course.
Okay.
And this is where your argument does hold a lot of weight, that people can say that Bitcoin Cash is working better as it stands at this day, but what about 6 months from now, 12 months from now, 2 years from now? It's not a long-term solution.
It's a very poor long-term solution. So with 16 gigabyte block size, we're about halfway there, but you're adding a new 1 terabyte hard drive every 10 hours. And so finally, with a 32 gig block size, we're almost there with 98,000 transactions per second, and you're adding a 1 terabyte hard drive every 5 hours. But it's taking almost an hour and a half to download this 32 gig, and then you've got to confirm all those transactions, and then you got to propagate it to 4 or 5 other nodes. So that's like a 4 or 5 hour, or more like a 5 or 6 hour processing time for a block that's coming in every 10 minutes. So this just doesn't work at all. So here's kind of a summary of that, what it takes to get anywhere near our goal. So what does Segwit give us, right? Segwit gives us 3 to 4 meg block size, which handles about 12 transactions per second, and you only have to buy a 1 terabyte hard drive every 4.75 years. But with the malleability fix Segwit gives us, it makes it much easier to add side chains and second layer solutions. So the first side chain that's due out by the end of this year is called RSK, and it's going to run right alongside Bitcoin. It's a 1-to-1 peg, so it's like the same price of Bitcoin. It's merge mined with Bitcoin, so the miners can mine this coin with very little extra cost, yet they get the the transaction fees that are being attached to all the transactions on this coin, on this side chain. But when it first starts, it's going to be able to handle 2,000 transactions per second and has a 10-second confirmation time. And by the end of this year, or by the end of 2018, it's going to be able to handle about 20,000 transactions per second. And also, RSK is going to add Ethereum-like contracts to Bitcoin. But that's just the first sidechain. What about the first second layer solution? Now you're talking about Lightning Network is going to be the first second layer solution. And again, that's just the first second layer solution. And it's going to have 100,000 transactions per second with instant confirmations. It's going to probably be in the GUIs, the graphical user interface of your wallets, probably second half of 2018, maybe, fourth quarter 2018. So this is a much, much better way to scale Bitcoin than simply increasing the block size. Is the point of all that.
And that's obviously preparing Bitcoin, making it available for mass adoption at those sorts of transactions per second. So that, to me, is obviously the solution going forward, and not just doubling the block size every time you feel like you need to. I just wanted to read one of the questions here by Bob Jack. Bob Jack has said, any idea when this snapshot will take place, so they know who to give what? And Rocky did actually answer that for me before we got on the show. So I'm going to take this opportunity to pretend like I know something, and I'm going to tell you the block number. So it was 494784. Am I correct with that, Rocky? Was that the right block number for the, I know we've diverted a bit to the B2X, but it was a question that came through, and people are trying to prepare themselves for the most recent fork. So can you just confirm for us, mate? It's 494784.
Yes, it will be that block. That should happen around the 16th or maybe the 17th of November.
Great. Thanks for that, Rocky. Now, moving back to Bitcoin Cash, mate, what are you thinking? Do you think it's going to take some time for people to wake up to what you're showing us here? Or do you think that it's going to happen pretty quickly and Bitcoin Cash could see some heavy retracements again? What's your personal thoughts on that, mate?
Yeah, I think it already has been exposed for what it is, complete garbage. And this is just some pump that, somebody's doing somewhere in the world. And, I certainly, wouldn't, buy it or recommend anyone to hold it at all. The other attribute that they have, besides this 8 meg block, is they have what's called the emergency difficulty adjustment. What this is when they have less than 6 blocks in a 12-hour period, it automatically reduces the difficulty on that chain by 20%. And so that's why these blocks are coming in so fast, and that's why the network is so fast over there and so cheap, because they're putting so many blocks through that are mostly empty. So I mean, you can virtually do transactions for next to nothing, and they go through quick because it's being mined super fast. But why did they do this? Why did they put in this emergency difficulty adjustment? If it's so great, why wouldn't the miners from Bitcoin just switch over to Bitcoin Cash, right? It's the best, it's the better way, right? It's got bigger blocks, it's faster, it's better. Even Roger Ver said it's the real Bitcoin. But yet they had to put this in there to get the miners to come over. They had to lure them over with this financial incentive, saying, come mine over here, you're going to get this block reward. Right now in Bitcoin, the block reward is 12.5 Bitcoins. Every time you find a block, the network gives the pool who finds that block 12.5 Bitcoins plus all the transaction fees. So this is great, right? It's so much bigger block, so much faster. But why? Why did they have to lure him over? Why did they have to? This Bitcoin Cash reminds me of the kid on the block that nobody wanted to play with, right? Kind of a weird kid. And when he had a birthday party, his mother would pay the other kids to come over to show up, right? Because nobody wanted to go because he was the weird kid on the block, right?
Yeah, I think my mum used to pay about $5 per person to come to my party, so I'm well aware of that.
Yeah, I highly doubt that. You have quite. I think your channel is going to do good. You got, a fair amount of charisma, I think.
Oh, thanks for saying that, Rocky. All right, moving back on to things that aren't me. Mate, if you go back, I'll let you talk so we can go back to that screen you're bringing up about Bitcoin Cash there.
Yes, this is my other major argument against it. Not only is that bigger block size no way to scale Bitcoin, this emergency difficulty adjustment is a disaster. It's good for the network right now. I mean, like once again, this is a great short-term solution for a long-term problem. So Bcash forked on August 1st, 2017 at block 478558. So at that time, there was zero difference in the block number, right? Because they just forked and they both chains have the same block number. But 2 months later, on August 2nd, here's the Bitcoin block number on this date, and here is the Bcash, which is 42% more blocks than Bitcoin. So that's basically a 42% inflation rate over Bitcoin.
Yeah, of course. For those of you not familiar with the basic laws of economics and supply and demand, that means more Bitcoin Cash is hitting the market, therefore price per coin should be worth less. That's the basic rules of economics.
Yes, but there's one more very important aspect to all this I'm going to hit on in just a moment. So a few weeks later, on October 13th, well, yeah, almost 2 weeks later, I ran the numbers again, and at this point, it's 57% inflation rate over Bitcoin.
Okay, and is this a trend that's continuing, Rocky? Oh,
I'm sorry. I'm sorry, I couldn't.
I was just asking if this is a trend that's continuing, but you've clearly actually got it there, so please continue.
Yeah, on the 29th, I ran the numbers again. It did look like it kind of topped out. It was still at 57%. But what does this mean? So you've heard of, are you familiar with the halving?
The halving in 2020? The rewards halving? Is that what you're talking about?
Yes, the halving in Bitcoin in general.
Yes, I am. It basically means that so you were mentioning before that 12.5 Bitcoin was received to the pool that mines that block. That would go down to 6.25.
Right. It started off at 50.
Sure.
And then after a certain amount of blocks, do you know how often there's a halving?
Mate, I understand the next one for Bitcoin itself is in 2020, but I don't know how often the exact number is. You could help us with that. That'd be great.
Okay, yeah, most people would answer that question every 4 years or about 4 years, and most people, of course, would be wrong. Okay, because it's a block, it's an amount of blocks. It's 210,000 blocks, which
Correct.
takes about 4 years if the blocks are very stable around 1 block every 10 minutes. But that's if it's very stable 1 block every 10 minutes. So Bitcoin's next halving is due to be in June of 2020. But if you have an inflation rate where you're going through the blocks 57% faster, you're going to get to your next halving 57% faster, or thereabout. It doesn't work out to be exactly that, but you're going to get there faster. According to my calculations, it's going to be about 1.5 years faster before Bitcoin has their halving. So now, if Bcash has their halving 1.5 years before Bitcoin, now their block reward just got cut in half, but Bitcoin is still 12.5, where theirs is going to be 6.25. What does that mean? Now they're going to have to double the inflation rate. Since the block reward is cut in half, they're going to have an inflation rate of 114% in order to lure those miners over to come mine it, right? So in order to get the neighborhood kids to come play with theirs. Right?
Yeah, I'd say what you mean.
And so now with 114% inflation rate, how fast are they going to get to their next halving? Even faster. Then they could, at some point, they're going to be like 2 levels below Bitcoin. Then they're going to have 228 or 254% inflation rate over Bitcoin. Right? It's just it's a snowball effect that just keeps getting bigger and bigger, and it's just a total disaster. It's complete garbage.
It essentially leads to, when made relative to Bitcoin itself, it leads to hyperinflation, and that's something we're trying to avoid in currencies.
Yes, the government in control in Venezuela, I think, would love Bcash.
Yeah, and maybe Zimbabwe too.
Exactly.
Yeah, man, it is a real concern with actually some of the altcoins we look at. I'm just going to divert to that. I know you're not well studied in the altcoins, but there are some of these altcoins coming out, man, that people are jumping all over because they make these huge, like, proof of stake coins. So it works a bit different to Bitcoin, but they're jumping all over them because they're making these huge rewards, similar to Bitcoin Cash, I guess, with the mining. There's these big proof of stake rewards in some of these coins, but what people are failing to look at is that it's not sustainable. You cannot create coins at that rate and expect them to hold value, because value's got to be tied to scarcity. And if you're just flooding the market with coins, they're not going to hold the value. So there is there's some dangerous times in the altcoins with the proof of stake coins, because proof of stake's been really popular and the good models have done well, but now there's these other models coming out where they're just, I can only describe the rates of inflation as hyperinflation, and that's not something that's good for any economy.
Mm-hmm. And look at this here. This is the result of having one of those emergency difficulty adjustments where their blocks are being mined so slow that they have to drastically decrease the difficulty, and then anywhere from like 25 to 30% of the miners on Bitcoin switch over to Bcash because they can mine blocks so fast over there, and actually make more money per hour. In Bitcoin with the 10-minute block time, Bitcoin's pretty stable at about 6 blocks per hour. Well, as you can see here in this particular hour, Bcash mined 49 blocks, and which is 716% inflation rate over Bitcoin. And this screenshot is from October the 4th. And I have another one here. On October 28th, they did 59 blocks in 1 hour. That's 883% inflation rate over Bitcoin. And that's just going to make the halving, their next halving, come so much quicker.
Yeah, I think the big problem that Bitcoin Cash faces is these implementations of the scaling solutions for Bitcoin Core, Bitcoin Original, if you'd like to call it. I think that's going to be the point, if you like, where people go, uh-oh, Bitcoin's faster. This has actually got pretty high inflation rates. It's not sustainable. It's not actually super scalable with the solution they're going for. So I think there's going to become a point when Bitcoin has these implementations that allow it to get these big transactions per second number where everyone just goes, oops. And
exactly.
That could be, no, mate, actually no currency in history has ever gone to zero. That's sort of the truth, but it could go pretty close to it when that happens. That's my personal opinion.
I don't know. I think Bcash might break that.
Well, I think you're very biased on that, Rocky. Look, I just think it's, for me, I would rather, and you'd probably even agree with this, mate. I would rather see people going into altcoins that actually have said, you know what, we're going to take a different route, but we're going to do it this way. We're going to explain it this way, and we're going to take a completely different name because we're not going to just trade off the popularity of Bitcoin. I think that's one of the things that annoys me most about Bitcoin Cash is it's an altcoin worth $10 billion, and I don't understand how that happens.
Mm-hmm. I just want to get back to Roger here for a moment. For the past 2 years, he's been complaining about that mempool backing up like we talked about, which does cause higher transaction fees and longer wait times for confirmations. And he's been saying that Core has a small block policy and a high fee policy. Core does not have a small block policy and a high fee policy. Core has a what's good for Bitcoin policy, right? They crunch the numbers. They're eyeballs deep in the code every day. Roger doesn't understand it in the slightest. That's why he said Segwit takes out the signature data from the block, and he's 100% wrong. It doesn't remove it. It's still there. It's just not counted towards the block size with Segwit. So here he is a couple months ago at a seminar where he was again talking about it. And if you look at the recent, this is a recent list of blocks coming in. These ones green are, more than 1 meg. And Roger has a mining pool. It's called Bitcoin.com is his mining pool. And he has his mining pool set to not mine blocks over 1 meg, even though he can now. So he's been complaining about blocks being too small for 2 years. Yet now he has the opportunity to mine blocks bigger than 1 meg, like all these other pools, and he refuses to do it. I mean, so he's a hypocrite. He's been going around saying, we need bigger blocks, we need bigger blocks. Now he could mine bigger blocks, and he's refusing to do it. Because pool operators have the choice to mine blocks as big as they want. They can set their mining software to mine blocks that are, half a meg or a quarter meg. Or right now, since Segwit has been implemented, they can set that number to 4. Not 1 meg, 4 megs. Because Segwit will allow a block up to 4 megs. He still has it set at 1. Now, he did mine a couple weeks ago. His pool did mine a few blocks that were bigger than 1 meg, and I did tweet that out. But now he's gone back. He's back to less than 1 meg again.
What's the advantage, just for someone who doesn't understand a whole lot about the mining process, Rocky? What's the advantage of only mining blocks that are less than 1 meg for Roger?
Typically, there's no advantage for it. I mean, you want to pull in as many transactions as you can because you're going to get that 1 block reward for mining the block. Then you're going to get all the transaction fees. So why would you limit yourself to only mine, half a meg or 3/4 of a meg or 1 meg or, 1.2 megs? You'd want to set that number to 4 if you want to make the most money possible. The only thing I can think of is why he's doing this is he's trying to keep that mempool backed up. So he's taking less transactions out of the mempool to keep it backed up. So when November 16th comes around, he could say, look, we've had Segwit for 3 months now and it doesn't work. The mempool's still backed up. We need Segwit 2X. So yeah, I think he's just trying to cripple Segwit to make it not work as it was designed to, in order to make it look bad. That's the only thing I can think of. But the problem here is it's not going to work. Once more wallets add the Segwit compatibility, these numbers are really going to go up. You can see this block right here. It's 1.1 meg. This is 1.1. This one's pretty small, but still over 1 meg. This one's almost 1.1. This is 1.12. This is 1.188. So, I mean, the blocks are getting bigger, and Segwit will take the block size up to 2 megs, And then later this year, they're coming out with another update called Schnorr signatures, which is going to then compress the signature data, and that's going to make the SegWit blocks 3 megs to 3.8 megs. And so if Roger's still doing this, he's only hurting himself, because these numbers are going to be 3 to 3.8, and that's going to just really shrink that mempool really fast, right?
Mm-hmm.
And so, you know, he's just hurting himself at that point. He's trying to back up the network, but there's so many pools that aren't doing that, that they'll just make a lot, those pools will make a lot more money than his pool.
Yeah, right. That's interesting. So he's kind of biting off his nose to spite his face at the moment.
Exactly.
Yeah, right. That's interesting. Hey, Rocky, we've got about 5 minutes left, man. Did you want to go into any other like critical information for the? I know we could go on for hours about Bitcoin Cash, scalability, increasing block size. It's literally, man, it's a conversation you can have every day for 5 hours and still learn new information. But just for the newbies, if there's anything really critical that you feel like you need to bring to us to wrap up this assessment of Bitcoin Cash and your opinion on why the scalability solution that they're going for long term. Is there anything you'd like to wrap up with there, Rocky?
Yeah, sure. I got one more thing for you here is the mining security. Here is a pie chart for Bitcoin, and you can see here there's a lot of different pools mining Bitcoin, and there are some miners that are mining it that aren't identifying themselves. And it's 3.47%. Let's see, I don't have my glasses on. 3.47% of this pie are miners who are just not revealing themselves. But that's okay, because let's say this is the biggest piece of the pie here, and they're at 16.6, right? So if it was this pool, you'd add these numbers together, and you would get a number significantly less than 50%. And this is a big deal because you know, in the early days on Bitcoin, people were mining with CPUs, and everybody was mining solo. That's called solo mining. You're mining by yourself. There were no pools at this point. Pools didn't come about until 2012. They started getting popular. I think it was 2011 they started popping up. In 2012 they started getting really popular. And what happened was one pool got a lot popular than the others. And that pool started getting like 46, 47, 48% of all the mining hash rate was in that one pool. And the community was beside itself. Everybody was in an uproar. Oh my God, if they could get 50% of the mining power, they could then get 51% and do what's called a 51% attack. Have you ever heard of a 51% attack?
I've heard of the 51% attack as the term. I've never really understood what it means, Rocky. Did you want to explain that to us quickly, mate?
Theoretically, if you had 51% of all the hash power, you could rewrite history in Bitcoin. You could take the last block mined and remine it with all the outputs going to your wallet. And you could remine that block, then mine the next block and the next block, and then you would have the longest chain. And the nodes would see that as the longest valid chain, and then that would become the actual chain of Bitcoin. But all the transactions have been diverted to your wallet, right? So that would be a major attack on Bitcoin. So this is why they never wanted one pool to have more than, or even get close to 51%. So back in 2011, 2012, when this happened, that pool came out and made a statement and said, you know what, we don't want this instability in Bitcoin, and if we start to get close to 50%, we're going to close, you know, new people coming into the pool and just kind of cap it off. And so the other pools, the other pools were nowhere near 50%, and they said, okay, yeah, that's nice of you, and we're going to do the same thing. If the hash rate or the hash power ever comes to our pool and we start to get close to 50%, we'll do the same thing. So the community just kind of came together and kind of policed itself. So, but this is Bitcoin chart. So now if we look here at a Bitcoin Cash chart, look at this. This is 34% is unknown. And this one here is 36% unknown. What happens when you add those numbers together? What if most of this unknown is really this pool, right? They got over 51%. they could pull a 51% attack. Okay, and this is a good day, actually. This is a really good day. If you check this website often, sometimes you're going to see it like this.
Wow, look at that.
This is 93%. 93.75% is unknown.
Yeah, it's not decentralization either if it's held by, well, obviously the unknowns won't be held by one party, but if a large percentage of that is, that's decentralization.
Yes, if a large percentage of it is one pool, let's say 85, maybe 90% is one pool, they could rewrite the past 8 blocks, send all the money to their wallets, then mine the next blocks faster than these people over here could mine, faster than this little tiny piece of the pie. And they could rewrite the history of Bcash, and they would steal all these funds. Now they could do this, under everyone's nose. They wouldn't realize this is going on till it would be too late. They could do this, take all those coins, send them to an exchange, of course, turn them in for Bitcoin, and then by the time people find out what's happened, and and news gets out that this is going on, they've already made boatloads of money and turned it into Bitcoin, and they're already safe. So anybody who wants to participate in transactions or store their value in a chain that has 93.79% of the mining hash rate by an unknown, you're a fool. You need to learn about a 51% attack, and you need to learn what's going on here with B-Trash. It's total garbage, and this is why. Now, what if this is not one pool? What if it's 2 or 3 pools? Nothing changes. It would be simple for 2 or 3 pools to get together, behind a closed door and say, hey, we're going to do an attack next week. This is what we're going to do. This is when we're going to do it. We're all going to remine the past so many blocks, and then we'll just split it up evenly 3 ways, and then we'll all profit from it. So they could all be in cahoots, so to speak, and do it together if it's not one pool. But if like 2 or maybe 3 pools are in here and have 80% or more, they could easily rewrite the past 6, 7, or even 8 blocks.
Yeah, it's really interesting. I had heard the term 51% attack before, and I assumed that it was something along those lines, but it's great to have that information actually solidified in my mind, Rocky. So thank you for explaining that to us, mate, and thank you for explaining some of the risks in Bitcoin Cash at the moment. I try not to go too heavy on dissing coins, but I think you've got some really valid points there as why it's certainly a high risk investment when compared to Bitcoin itself, or indeed some of the altcoins that don't have these sort of aren't susceptible to these sort of complete chain attacks, which at the moment we can't say that it is, but the problem is we can't say that it's not with those sorts of graphs. So for me, that's really, really high risk. I've never set a buy order on Bitcoin Cash. I've never seen a point in it. I'll never set one on Bitcoin Gold or B2X either, because I don't see the value that they're adding to the economy. I think there's altcoins doing a better job than another Bitcoin fork that's just trying to play off the popularity of Bitcoin. So Rocky, we are going to wrap it up there, man. I wanted to thank you so much for that really, really thorough explanation of Bitcoin Cash, why you personally believe that its value is only temporary and it won't be a long-term solution for scalability in Bitcoin. I think that's given both the newbies and some people with a bit more experience some great information. So I wanted to thank you for that, Rocky. Rocky, you don't have that information on your Hangouts website or anything like that, do you? Your Bitcoin Hangout, Bitcoin Ascent?
No.
Okay.
No, but I'm willing to come back later and do it again if you like. And I definitely would love to come back and do a similar presentation on B2X.
Oh, we'd love to have you back for that, mate. I think a lot of people are trying to get ready for B2X fork, so we'll try and organise that for sure. Obviously before the fork in mid-November. So Rocky, thanks again for joining us. For those of you interested, Rocky does do Bitcoin meetups in Southern California. I'm just going to use my mad computer skills to bring up his screen here, present to everyone. So Rocky does Bitcoin meetups in Southern California. As you can see there, it's been pretty successful. He's had the 1 month with the with the downward Bitcoin turn, but it's going to be a good Bitcoin meeting for your next one, mate, because we've had another good bull run on Bitcoin. So we'll be showing some good green figures in that next meetup. And just for the people who are interested, that website again, Rocky, just is BTC meetup. Is that right?
btcmeetup.webstarts.com. It's on my lower third right there.
Yeah, got it there, mate. Great. Everyone can see it there. Rocky, thanks again for joining us, mate. I'm going to check out. Thank you to the Crypto Wave investment crew who tuned in for the discussion today. And we'll have Rocky back on soon, pointing to his Bitcoin while I point to my PIVX sign. We'll have Rocky on again soon to discuss B2X fork coming up in mid-November. So thanks very much to our special guest, Rocky Palumbo. Cheers, Rocky.
Goodbye.
Cheers, everybody. All right.